Good day, everyone. Today's objective is to discuss the corporate governance framework. But first, let's discuss its definition and objectives.
What is corporate governance? Corporate governance is a system of rules, practices, and processes by which a firm is directed and controlled. Corporate governance involves balancing of interests of the company's many stakeholders such as shareholders, management, suppliers, customers, government, financiers, and the community. The objective of the corporate governance is to enhance shareholders' value and protect the interests of the shareholders by improving its corporate performance and accountability.
After knowing the definition and objective of the corporate governance, let's go through its framework. A shareholder, also known as a stakeholder, is any person, company, or institution that owns at least one share in the company's stock. Because shareholders are the owners, they reap the benefits of the company's successes in the form of increased stock valuation. But if the company does poorly, the shareholders will also suffer from its losses. The board of directors, on the other hand, is a group of individuals elected to represent the shareholders. As we can see in the framework, the board of directors is accountable to the shareholder because their objective is to establish policies for corporate management and oversight, making decisions on major company issues. Under the board of directors are the audit committee, compensation committee, and nomination committee. All three committees will report directly to the board of directors. The first committee is the audit committee. The audit committee is in charge of overseeing the company's financial reporting, monitoring of accounting policies, the oversight of external auditors, regulatory compliance, and the discussion of risk management policies with management. The second committee is the compensation committee. The compensation committee is in charge to ensure the board determines the adequacy and reasonableness of the total compensation paid to the CEO and other officers. Lastly, the nomination committee. The nomination committee is in charge of evaluating the board of directors of its respective firm and examines the skill and characteristics needed to board candidates. Next in line is the management. Management is responsible for establishing and maintaining internal control to achieve the objective of effective and efficient operations, reliable financial reporting, and compliance in applicable laws and regulation. The management is composed of chief officers such as the CEO, CFO, CMO, and COO, wherein they are appointed and monitored by the board of directors.
Next is the internal control, wherein the management manages and operates it. Internal control are the mechanisms, rules, and procedures implemented by the company to ensure integrity of the financial and accounting information, promote accountability, and prevent fraud. Besides, applying with laws and regulations and preventing employees from stealing assets or committing fraud. Internal controls can help improve operational efficiency by improving the accuracy and timeliness of the financial reporting. Audit mechanisms. The audit mechanism provides reasonable assurance to the management and reports to the audit committee, compensation committee, and nomination committee under the board of directors. Lastly, it is the auditor's job to monitor the internal control of the company to be able to perform valuations and make recommendations for the improvement of the controls. Control environment is the foundation on which an effective system of the internal control is built and operated in an organization that strives to, number 1, achieve its strategic objectives, number 2, provide reliable financial reporting to internal control and external stakeholders, number 3, operate its business efficiently and effectively, number 4, comply with all applicable laws and regulations. Number 5, safeguards its assets.
So that's the corporate governance framework, and I hope our viewers have learned a thing or two, starting from its definition and objectives down to their responsibilities. Good day!